This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning coming out of a holiday midweek one. Welcome change. We're coming to you, as always, from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, good morning. And when's the next midweek holiday? Any idea?
He
keeps track of.
I'm not in September 19th is one, but I don't know whether we're getting one before that.
That's a Ganpati holiday,
right? That's a Ganpati
right?
holiday as well.
Okay, but the smiles, right, on everyone's faces as you have that midweek break. But I don't think there's going to be any smiles on the bulls' faces this morning, considering the cues that we have today.
Yeah, that's right. You know, before we go on, just want to wish all our viewers, our Parsi viewers, a very happy Parsi New Year as well. So those who got a holiday, enjoy it. And, you know, the kids are really happy. The roads are clear today.
Absolutely.
So,
no school buses.
All right, well, let's just quickly tell you what you need to know, because it's not just one day, the overnight session, but 2 days worth of price action that the market will react to. By the way, you know, if you want to look at the last session here, it was a decent session. That's the Nifty and the market here. We saw a very good bounce on Monday. But the global action is still looking tricky. It was looking tricky Monday morning when we started a fresh week. And over the last 2 days, which is, two US sessions, not very much has changed. So let me just tell you what the 2-day change is. There you go on your screen. The S&P is down about 0.6%. Over the last 2 days, the NASDAQ is absolutely flat. The positive thing is that oil prices are down about 2% or so in the last 2 sessions as well. Now, lots of data over the last, the Asian session, the Chinese data. I'll get to all of that in just a bit. But the one thing which I think is important is that the U.S. retail sales data was indisputably strong. And I think that is something which kind of stands out, because the health of the U.S. consumer and how how the consumer in the U.S. is spending has got implications for inflation there, and what the Fed does, etc., etc. So that still is running very, very strong. As a result of that, U.S. yields have not given away. So you looked at equities, which are off a little bit, oil, which is off, but not yields. The 10-year yield in the U.S., the Treasury yield, is still at a cycle high of 4.21%. The dollar is still holding pretty strong at 103.23. So, we moved up from 102.5 a week ago to 103.23 or so. So this is the problem point, not just for markets here, but emerging markets as well. You want U.S. yields and dollar down, not up. In sharp contrast to what we're seeing in the U.S., look at China. So U.S. growth is resilient, but Chinese growth is disappointing. We got so much Chinese economic data for the month of July and January to July as well, and all of it, mostly all of it, severely disappointing estimates, consensus expectations. And as a result of that, we had the Chinese central bank, the PBOC, which cut rates. A rate cut was expected, but not yesterday. So it was in that sense unexpected. And perhaps there is more coming. But markets have taken the rate cut, the unexpected rate cut, as a sign that the Chinese authorities are waking up to the issue of very weak underlying growth in that market. By the way, it's got implications for metal stocks, etc. here, because on Monday, metal stocks, steel stocks, etc. all sold off. More on that later. The dollar is also, because U.S. is standing out, U.S. exceptionalism, right? The U.S. growth is standing out. It's rising against most currencies. Against the Chinese currency, it's up to about 7.3. It's also rising against other Asian currencies as well. And same is true for the rupee. In offshore markets, the rupee yesterday hit 83.5 at the day's high. So, and to add to that, of course, is the issue of inflation here in India, which, as we got to know, has hit 7.4%. It was 5% in the month of June, and this is far higher than expectations. Of course, it's been caused by a big surge in tomato prices, and the RBI in August had said that we'll kind of try and look through some of these vegetable price inflation-led overall inflation numbers. So maybe, that's going to be the case. But nevertheless, this does put downward pressure on the currency as well. So I think the rupee perhaps also in focus this morning. Just to circle back to levels here, the Nifty, as I said, saw a decent bounce on Monday. It's held on to the 40-day exponential moving average, which is 19,356. We got to close about 19,400. So that's the first level. which you kind of need to watch out for as we start another trading session. On the downside, 19,356. I mean, it'll be good if that's defended. On the way up, there is a falling trend line, which comes in at 19,570. And that's the one which needs to be crossed on a closing basis for more up move to come through, for confirmation that perhaps this correction is kind of behind us. On the bank Nifty, we tested the 78.6% retracement of the previous rise and the 20 weekly moving average as well. So again, the lows basically from last Monday will be important. On the way up, 44,213 and then 44,470. 44,500 I think are the two levels which the Nifty bank needs to cross for some confidence to come through. Monday's rise notwithstanding, I'll again go back to the first thing I said, which is the fact that global price action is getting a little complicated. So, it'll perhaps be choppy, not one way. That one way kind of rise we saw and gotten so used to, perhaps, at least for the very short term, is behind us. So, you got to be more skillful, more nimble if you're trading out there. The implied open is about 80 points lower this morning. Sonia.
Oh, absolutely right. I mean, it's not looking good at all for the bulls. So this morning, the start is going to be extremely weak. And it's led by the financials. So that's the weakest link, both globally as well as locally. We all know that the Dow was down quite a bit, almost 400 points overnight. And it's financials that were under pressure after Fitch came out with that downgrade on banks. They said that they have warned that they may be forced to downgrade a lot of these banks, whether it's JP Morgan, Wells Fargo, etc. So all of these stocks were under pressure overnight. But not just that, there was this weak economic data from China as well that has spooked the markets. Now, for our own markets, we've seen 2 days of large FII selling. So overnight on Monday, there was FII selling to the tune of almost 2,400 crores. Put together, it's 5,000 crores of selling in 2 days. A couple of things to watch out for. Of course, inflation, that data point has come as a shocker. It's a 15-month high, the July CPI data. We'll talk more about that in greater detail. But all of that cumulatively may put pressure on the market. So a couple of levels to watch. The Monday low and the 50 DMA stands at 19,258. So that is a clear support for the market at this point in time. Let's see if that holds or not. But that's an important line in the sand to watch on the downside. And the market has actually lost quite a bit of ground. I mean, from the recent high, which was the July 20th high, the market is down almost about 3% odd. So let's see how things go from here. But clearly, the bears have the upper hand this morning. So looks like that could be the case through the course of the week.
Well, that's right, Sonia. The global and domestic cues both in favor of the bears. Any which way you look at it, if you look at the inflation print, if you look at the US data that is very strong, which isn't very great news from a Fed perspective in terms of Fed action, and the Chinese data as well hasn't been looking too good. So the cues are in favor of the bears. Now, the Nifty has moved into sell and rise mode till the 20 DMA is conquered. So we are in that bit of a range. The bulls, though, they'll be scouting for some positive trigger because the FIs now, they move net short. I'll get to that in just a bit, but the short positioning, absolute positioning, has moved to the highest levels we've seen in multiple months. What did they do in Monday's trading session? Well, they added some short positions, close to around 6,000 contracts. And the 6,000 contracts pretty much were split down the middle. Close to 3,000 contracts odd were added on the Nifty as well as on the Nifty Bank odd. Now, the FI positioning has moved to the highest since April 2023. So in April 2023, this short positioning, net short positioning, was close to around 60,000 contracts. Now, at the start of this series, they had moved into a net long position. They were sitting on net longs, but now, in fact, that's turned around yet again. Remember, when we were net short in early August, actually, on that day, we opened up lower and we bounced close to around 150 to 200 points odd. Not saying that could happen today, but again, the short positioning has moved up. On the option side, 19,300 put, 19,450 call. Both of them saw a fair bit of open interest build up. So I'm taking the 19,450 call. The premium's around 70 rupees odd. So in the near term, the resistance level will be in that vicinity. 19,519 on the upside will be a bit of a resistance zone. The low that we saw on Monday, as well as the 50 DMA, that's at around the 19,250 odd. So that becomes a crucial support mark. Otherwise, if we break that mark decisively, we could easily slide another 300-400 points from there. The Nifty Bank, well, important levels to track. The 100 DMA, that becomes very, very important. And on Monday's trading session, well, we bounced from those lows of close to around 43,700 odd. So that becomes a crucial support zone. For starters, we start off in the red. The bulls will want to defend this 19,250. Maybe it's going to be that sort of a day where the bulls will just want to survive, take it as it comes, and then see whether or not we can break out of this 400-point odd range.
Okay, so let's see which way things go. Brent is now below $85 a barrel. Gold is at a multi-month low. So there's lots happening in the commodity markets as well. We'll talk about that in greater detail. But for now, looks like the start is going to be on the weaker side. We have two macro calls coming in for you this morning. One of them is from Sunil Tirumalai of UBS, who says that Q1 FY24 results saw less than 55% of stocks from the BSE 200 universe beating consensus estimates, and this is the lowest since the pandemic affected Q4 FY20 results, and a sharp drop from the 65% plus beats in the previous quarter. He adds energy, metals and autos witnessed more beat versus consensus, while chemicals and cement sectors had misses. Overall, the Nifty EPS is seeing downgrades led by Reliance, IT and commodity sectors and offset by upgrades in financials and autos. UBS is cautious due to extraordinary valuations versus ordinary outlook, and they prefer banks.
All right, on to some macro calls now. Samir and Chakrabarti of Citi says that they've revised average F524 headline inflation forecast to 5.7% year-on-year versus 5.3% earlier. Headline inflation could average 6.9% year-on-year in September this year and 5.9% in December before falling towards the 5.2 level in the first half of 2024. The base case is no further rate hikes, but Citi has pushed the first rate cut call to June of next year versus April earlier. Citi believes RBI would likely avoid a knee-jerk reaction in the October policy meeting, but there are factors that could make the RBI consider a rate hike in December.
Okay, there's one more view coming in for you to the inflation shocker. Upasana Chachra of Morgan Stanley says they now expect inflation to rise in the near term before moderating to below 6% from November. They also do not expect rate easing to start until Q2 of 2024. They believe liquidity management will likely remain the focus in RBI's inflation fight.
Well, the money market is closed today on account of Parsi New Year, Navroz. Well, we have a lot of stock-specific action to track for you. Get to that in just a bit in our special Top 10 segment. For the time being, though, let's just run you through the list. You have ITC, Infosys, Mahindra & Mahindra and GMR. All of them should be reacting to positive news flow. On the flip side, you have InterGlobe Aviation, Z Entertainment, Vodafone Idea, ONGC, Reliance Industries and VIP Industries. They'll be reacting to negative news flow in the last couple of days.
Okay, well, Dean Kim, head of Global Research Product at William O'Neill and Company, is joining us. Dean, good to have you with us here. Thanks very much for your time. It's bad because it's good. That seems to be the issue, especially in the US. Yields are up and dollar is up, and equities are sulking a little bit. Does it change anything dramatically, Dean? Should we be prepared for, in a way, reflation once again from looking out for recession around the corner, almost a reflationary kind of a situation?
Yeah, we're kind of in a tricky situation at the moment, but I look at a couple of things. One is, we have to remember that NASDAQ is up 30% year to date, and S&P is up 16%. So in my mind, it's completely natural for some profit taking, especially on the back of bond yields rising. So you have the 10-year almost at the all-time high, or fairly high up there, and then the 2-year continues to stay up. And what I think what the market is thinking now is that while inflation is starting to come down a bit, it's very stubborn. And when you look at components like labor, rents are coming down, new rents are coming down, but overall still buoyant. And now energy prices are putting upward pressure on inflation. And couple that with retail sales coming in better than expected. So there's a lot of spending power still out there. I think that's what's making Fed think about continuing its hawkish stance versus backing off. So I think the market is kind of translating all of that and deciding to take some profit at the moment. Now, both S&P and NASDAQ did reach their 50-day moving averages today. And so according to our methodology, we have shifted the market status to downtrend. So I think for investors in the U.S., we should take note of that and be cautious. And if we certainly break the next level support, which is August high of last year for both S&P and Nasdaq, then I think the worry meter will go up. So we're kind of in the camp of waiting out this sort of bearish August and perhaps looking towards second half for better performance.
Dean, hi, good morning, and thanks for joining us on the channel. I wanted your thoughts on how one should approach the Nifty now, considering that so far it's been a one-way rally, but now there are some hurdles around the 50 DMA. Your thoughts of whether this 19,500 level can be scaled convincingly, and over the next few months, what could be the markers?
Yeah, so it's good to see, I look at the sensex, and it's good to see the sensex sort of bouncing off the 50-day moving average in the last trading session. So I think that's a healthy sign. However, given some of the macro headwinds felt in the U.S. as well as particularly China, we may see some selling pressure. So if the sensex breaches the 50-day moving average, I would take stock and start to trim positions in those stocks that are heavily extended. And so I think it's now time to be more cautious and really pay attention to the technicals on your stock holdings.
And before we let you go, any quick stocks that you have in mind? I mean, you track the Sensex components as well very closely. Anything where you still see an uptrend given the volatility in the market?
Well, I think, few stocks comes to mind. We tend to look for stocks that are breaking out from early stage bases. And so like Varun Beverages in the consumer cyclical space, Astral, as well as Endurance Technologies, those types of stocks are acting well. And then I think pharma, Cipla, as well as, in other areas like Sera, sanitary ware, MedPlus is another related healthcare name. So I think those are all looking fairly good in terms of early stage breakouts. Other names like Dixon Technologies, I think India is doing a great job in terms of manufacturing their own components. So that could be the next theme for growth for the country. And so I would pay attention to these types of names.
All right. Thanks a lot, Dean, for joining in. Appreciate your thoughts here on CNBC TV18. We'll step into a quick break on the other side. Lots of stocks to talk about, plenty of newsmakers, so do stay tuned in for that. Coming up in a bit. Welcome back, folks. You're watching Bazaar Morning Call. Hope you're having a good morning so far. The bulls are definitely not going to have the best morning given the gift nifty. Implied opening suggests an 80-point cut, but lots of stocks to focus on. Mangalam is here first up to tell us why you should be looking at ITC this morning. Mangalam, over to you.
Well, the bulls may be happy with ITC this time around because the results showed strong internals. What's good? The cigarette revenue grew about 13% and that was led by volume growth of anywhere between 9 to 10%, much higher than street anticipation of 7 to 8% itself. The FMCG vertical, that's the growth driver of the company. The quarterly sales run rate has crossed the 5,000 crore mark for the first time with margin expansion. That's good. That means the overall margins have come in at around 39.5%, which is above street expectations. And we've seen the net profit also beat street expectations. In terms of the other segments, yes, the hotel business grew just about 8%, slightly lower than expectations, but this came on a high base with expanded margins. Paper revenue declined by about 6.5%. That was expected. And agri-business also saw a revenue decline of 24%. This was largely on account of export bans in the wheat business. If you adjust for that, the agri revenues have actually grown by 31%. Over and above all of this, the companies also announced a swap ratio for the hotel business demerger. Shareholders will get 1 hotel share for every 10 shares of ITC, and this lists about 15 months from now. The stock has recently corrected about 10% from its record highs, so see some bounce back.
Okay, all right. Thanks a lot for that. Mangalam, well, Infosys is the other one that could give some kind of support. Rima joins us to tell us more. Rima?
Thanks so much for that. So Infosys has won a mega deal. It's worth 1.5 billion euros over the next 5 years from a EU-based telecom company, the Liberty Group. The contract is initially for 5 years and valued at 1.5 billion euros, but can be extended to 8 years with an estimated value of $2.3 billion. If you remember, Infosys had shocked the street after cutting the guidance in Q1 of FY24. They were only guiding for a 1 to 3.5% growth. So this deal will provide some more confidence. And given the fact that now off late we've seen many large deals, whether it's HCL Tech last week and now Infosys, I think the confidence in IT is going to go up. The only question is how much of it is going to be net new, because Liberty Group is an existing client of the deal. And there's another question mark on the kind of margins Infosys will enjoy on this deal. But no taking away from the fact that the company has won a very large deal. Back to you.
Okay, all right, Rima, thanks a lot for that. So that's Infosys going with green over there. But Indigo, I'm choosing red for that stock, at least at the starters, as the Gangwal family has launched a mega block deal in Interglobe Aviation. Now, this will be the third tranche of selling from the Gangwal family in Interglobe Aviation. And this, of course, is source-based information at the moment. The Gangwal family will be selling an additional 4% stake in Interglobe Aviation via a block deal today. The indicative price stands at about 2,400 rupees, which is almost a 6% discount to the current market price. And they're looking to raise about 3,730 crores via this stake sale. Now, currently the stake that they hold is a little under 30%. After this block deal, they'll be left with another 25.7% stake, which is around, which is valued at almost 26,000 odd crores. Now, remember, today the stock may be in the red because of this overhang. But if you look at the trajectory, the stock has had a brilliant run in the last 6 months or so. It's up 35%. It reported exceptionally strong numbers in the quarter gone by. There were record high profits and EBITDA. And there are a lot of things working in favor of Indigo, as we know, whether it's strong domestic traffic, lower fuel and favorable yields that aided earnings. So a lot of bulls on the street as well. Citi has raised their target price to 3,400 on the stock, while Macquarie has an outperform with a target price of 29.50.
Okay, all right. Thanks a lot for that, Sonia. Well, Surbhi is joining us to give us an update on Zee Entertainment. Surbhi?
Thanks so much for that. So, SEBI has issued a confirmatory order in the Zee Entertainment case. They said that they bar Puneet Goenka and Subhash Chandra from holding any key managerial positions in Zee Entertainment and other 3 group companies, which is Zee Media, Zee Studio and Zee Akash News. They also said that they will be barred to hold any KMP positions from any other company that has been created post the merger as well. They expect the probe to be completed in the next 8 months. So, for now, going with red on Zee.
Okay, thanks very much for that. Well, Rima is joining in now on Vodafone Idea. Rima?
Well, it's a weak set of numbers. There is a top-line growth of 1.2%, but margins have contracted. The losses are mounting. In the quarter gone by, the company had a loss of more than 7,800 crore rupees. The debt has gone up. The company's subscriber base has also shrunk, and their capex is the lowest on record this time. But you know what's also concerning is the company has said that they have a payment of 1,680 crore, which is due on 17th of August. They're unable to make that payment on time. There is a 30-day grace period which has been offered for any spectrum payment. It's a part of the notice invite applications. So the company is availing of that 30-day grace period to make that annual spectrum payment of 1,680 crore. They go on to say that in the event of the company unable to meet this obligation, then one of the promoters has committed to bring in 2,000 crore rupees. So that's a bit of a positive, but numbers are weak. Back to you.
Okay, the numbers are weak. Thanks for that. Well, the Mahindra Group has outlined its strategy for electric vehicles and farm sectors in a huge event that they had in Cape Town over the weekend. In fact, over the last 2 days. Parikshit Luthra is here with more details and all of that. Parikshit, over to you.
Here in Cape Town, the Mahindra Group has outlined its future strategy for electric vehicles and the farm equipment sector. Starting with electric vehicles. Now, this is a time when electric car sales are picking up and they could cross the 1 lakh mark. Mahindra has only one electric SUV in the market right now. Next year will be the E8, which will hit the markets in December 2024. What they have done, they have unveiled a new brand identity for electric vehicles, an infinity loop logo, which will be carried by all future electric vehicles, including Born Electric and ICE vehicles, which are converted into electric in future. This is to differentiate the EV portfolio from the ICE portfolio, which will continue to carry the Twin Peaks logo. They've also showcased a production-ready BE05 electric SUV to show that they are ready with an electric SUV for the market. Behind me is an electric Thar, a 5-door electric Thar, which could come to markets after 2027. This is also an indicator of the 5-door ICE version of the Thar, which will hit the markets next fiscal. The company has also showcased the Oja range of tractors. Now, these are ICE tractors exclusively in the farm segment, and this will be important for the Mahindra Group because these are lightweight tractors that have been launched to target farmers in the horticulture sector, orchard farming, those with smaller land parcels, not just in India but in ASEAN and US. And the company believes that this will be important for driving their market share, driving the next phase of growth in the tractor segment.
Oh, absolutely. Thanks a lot, Parikshit, for that. So Mahindra is aiming to double their export target over the next couple of years. And in the tractor space as well, this 20 to 40 HP lightweight tractors, they're looking to increase market share there. So the stock could be in the green this morning. But let's go across to Sonal. She's talking about the windfall tax hike and the impact that it could have. Sonal, over to you.
Thank you for that. Well, it is a big hike that has come by because of the way crude prices have moved in the last couple of days. Windfall tax on crude petroleum production, that has been hiked to 7,100 rupees per ton, which compares with 4,250 rupees per ton. And if you look at the trajectory as well, in last couple of changes that have come by, it has been increased from 0, that was what we saw in June, to 7,100 rupees per ton right now. Windfall taxes on diesel, that has been hiked to 5.5 rupees per litre versus 1 rupees per litre. This is the export duty basically. And this is negative for the likes of Reliance Industries. On petrol, it continues to be nil, but on ATF, it has been increased to 2 rupees per litre versus nil earlier. So ONGC, Reliance Industries, the companies from the oil and gas space will be in focus on the back of this.
Okay, all right. Thanks a lot for that, Sonal. Well, let's hop across to Vivek. He's joining us to tell us about GMR reports numbers. Hi, Vivek.
Well, good morning. It's an operationally strong quarter from the company this time around. Most of the operating metrics have improved both sequentially as well as on a year-on-year basis. Along with that, the board has also gone ahead and approved a fundraising proposal to raise up to 5,000 crores. This could be done via the FCCB route or the QIP route. Looking at the numbers themselves on a year-on-year basis, revenue is higher by 40%. EBITDA, core EBITDA is up 77.5%. Margins to expanding over 700 basis points on the back of higher operating expenses as well as a higher tax rate. This time around, the net loss has come in at close to 30 crore. But last time around, the losses were over 130 crore. Key highlights, in the quarter gone by, the aero revenue is up almost 17%. Non-aero revenue this time around is up 34%. Company says that the passenger traffic, after a while, has gone ahead and surpassed pre-COVID levels. And this time, it's higher than what it was in the first quarter of FY20. Along with that, the management commentary too is quite positive. They're saying the traffic will gain further momentum with the additions of routes as well as airline capacity that the company is targeting.
All right. Thanks very much, Vivek, for that. Now, the next one is certainly a stock which perhaps goes in the red bucket, VIP Industries, where the managing director has quit. Mangalam has got more. Mangalam.
Well, yeah, VIP's MD Anindya Datta has packed his bag with immediate effect due to personal reasons. And this is interesting because he had joined just a little over 2 years ago from Lotte India. He was earlier the MD of Have More India itself. What's more interesting is that his predecessor, Sudeep Ghosh, had too resigned in 3 years of being at the helm itself. That makes the new appointee, which is Neetu Kashiramka, who is ex-Jyoti Labs, as the MD designate, the third MD designate in the last 5 years itself. And what's interesting about Neetu Kashiramka's appointment is also that she too joined the company in May 2023 itself, just a couple of months ago, as the CFO. In family-owned companies, such churn at the top usually is viewed as a negative sign from a shareholder standpoint, which is why maybe, as against its peers, VIP has been an underperformer. In fact, this year itself, the stock is down 4% as against Safari, which is up over 100% itself. See some more red on the stock.
Okay, thanks a lot for that. Well, let's watch out for all of these stocks. But NMDC is the other one, reported a good set of Q1 numbers. The results were driven by higher realizations, lower other expenses and royalty-aided margins. Nigel, in fact, caught up with Amitav Mukherjee, who's the chairman and managing director of NMDC, began by asking him about the quarter gone by and quizzed him on the outlook. Also asked about the outlook for NMDC Steel. So listen into that conversation.
We are looking at more than 45 this year. Comfortably, we should be I think we should be able to achieve around 47 to 49. That is the number we are looking at, especially in terms of Kumar Swamy that is coming in. And we had an upgradation at Bacheli that is almost in commissioning stage. So I believe that these two will take us to somewhere between 47 to 49.
How does NMDC's pricing in quarter two so far, compare with an average of quarter one? And how do you expect prices to move from here? Is there any downside risk, or do you believe now they're bottomed out?
You see, the prices, of course, there's a lot of pricing pressure right now. Even if you see the quarter one averages, they are at least down 30% as compared to last year. And going forward also, even as we enter Q2, we have had to take a couple of reduction in prices. So obviously there's a major pricing pressure. Of course, as of now, I don't see any light at the end of the tunnel. The pressures continue. And of course, the good thing is that the offtake has been rather robust despite the prices not taking. And I think so far as the volumes hopefully will take care of the downside in prices.
Okay, all right. What about margins, sir? For the company you're doing at the upper end of the 30% odd mark, do you expect to continue in this sort of margin trajectory, given that you're saying that prices are under pressure, but you'll get the benefit of operating leverage? So how does it pan out?
Yeah, I think our EBITDA margins would be around 40%, give or take, plus up to 1 or 2%. The same almost, I think in Q1 we did around 41%, 40%. So I think with these prices and with our operating costs coming down, with the volumes going up, our operating cost would be a little coming down a little bit. So with those things, I think we should be able to maintain an EBITDA of around 40% plus minus 1 or 2%.
All right, Mr. Mukherjee, first of all, congratulations as well on commissioning the NMDC steel plant. I think for many, many quarters, actually, we've been talking about this. I could also extend that to a couple of years as well. We've been talking about this. But now you've finally lit up the furnace, and I believe that commercial production is almost underway now. So give us a couple of numbers with regard to NMDC steel. What kind of sales volumes can you do from NMDC steel for the coming year? If you could give us some kind of a number out there. And also, at what level of sales does it break even?
I think the good news, as you know, that we have lit up the blast furnace. Yeah. And about within a week's time, we should be able to roll out the coil from our own hot metal. So that's been there for, this is the day we've been working for the last couple of years. There have been certain slippages, but now I think we are almost there. The blast furnace is behaving the way it should have been, touch wood. And we have, in fact, the flare has also been lighted last night. And tonight we expect the slag to come out, and in 3-4 days for the hot metal, proper hot metal, which we can make into steel and then roll it into coils. The good thing is about the NSL is it's a very, very modern plant, and the output is supposed to be one of the best qualities in the country. And it's going to consume a lot less energy than the traditional steel plants do because we have a continuous caster. So that's going to be a major upside for the steel plant. First year, I think in the first half, we are targeting at least 1 million ton of steel. We have a constraint in in the lime dolo plant not being available, and we are making steel with purchased lime. So that's a major logistical challenge. It's a major logistics challenge. Despite that, in the first half, in the second H2, we would hope that we'll reach the 1 million mark.
Right.
By the time we get our lime roller plant in stream and do 2 million ton, we should be able to break even because the products that we'll be selling is essentially premium products.
Okay, got it.
They will fetch a premium of not less than 6,000 to 7,000 in the market.
Okay. All right. Got that. But Mr. Mukherjee, at what level does it break even? 1.5, 2 million tons?
It will break even around 2 million tons.
Around 2 million tons. Got that.
That's the back of the envelope calculation.
Got it. All right. So 1 million tons is what you're looking at. At 2 million tons, you'll break even. Mr. Mukherjee, NMDC, there were talks that NMDC has to buy 10% stake in NMDC Steel. Is that still happening? Because your shareholders will want to know whether or not you're going to be spending this money. At current reckoning, it will be close to around 1,300 to 1,400 crores.
Yes, there has been talks, but there has been no formal communication as such.
Okay.
But there has been talks, but I think it's too early in the day because the government needs to decide. But yes, there have been informal talks that in Chhattisgarh, some amount of presence is required for NMDC as steel plant. So I think anything around 10% might be offered to NMDC. And if it is offered, then we'll have to look at what prices it is offered and what terms it is offered. So we'll take a call at that point of time.
Okay. All right. Tell us, what is the debt in NMDC Steel's books as of now?
As of now, it's 5,000 crores. It's almost 5,000 crores.
Okay.
That's the debt as of date.
And have the bids come to buy out the unit? Because there has been an offer that's been put up, but have the bids come in?
I am told that there's been a fair bit of interest and multiple bids have come in on the EOI. And I understand that the share purchase agreement is right now being finalized, and once it is finalized, then the process of disinvestment would go ahead. As of now, of course, everybody was waiting for commissioning of the steel plant, and now the steel plant has almost been commissioned, or it will be commissioned in the next 3 or 4 days.
Okay.
And, I think then then that would gather pace.
By when does it get closed out? By when does this NMDC steel plant get sold?
I cannot give you a visibility on that because we are not running that procedure. That's being that process is being run by Deepam. So all I know, once the plant gets commissioned, then the further process would pick up speed, and it should reach to a logical conclusion in a fair amount.
This calendar year, you think so?
I can't speculate on that. It will be difficult to speculate on that.
All right, that's an interesting conversation with the management of NMDC. Now let's move on to some macro data point out of India. I mean, we talk about inflation numbers out of the US, but well, we got a shocker out of India, CPI numbers as well. And the numbers shot through in big time, but largely on the back of one item, tomatoes. How should one read this? Lata is here in the studios to explain. Lata, morning.
Well, tomatoes, yes, but it actually led the entire vegetable basket up by 38% month on month. So clearly it was a vegetable-led inflation. In fact, June 4.8, July 7.4 on the headline. This 2.6 percentage point in rise, 2.3 percentage point was accounted for by vegetables. So that's the good news because that is transient. The bad news is cereals also contributed to higher food inflation. Both cereals, that is rice and wheat, and pulses were up 13% year on year. And that usually is sticky given the uncertainty in monsoons that we are seeing. The second important takeaway is positive, and that is that core inflation is down to 4.9%. Earlier in this year, it was at 6%. People were expecting 5% in July. It's at 4.9%, and that's extremely positive because that's also has a tendency to stick. Now, because of this arithmetic 7.4, everybody was expecting 6.6. If that's come at 7.4, the full year average and the Q2 rises rather sharply. Q2, RBI had said 6.2. Now they will have to revise it up to at least 6.8. And full year, they were expecting 5.4. They will have to revise it at least to 5.6. The net result is that rate hike is not being contemplated because it's, something you can look through. But food inflation does tend to, stay on given the weather uncertainties. So rate cut expectations now, or hopes rather, not even expectations, which were placed at April, go to June. Those who were expecting June have gone to August of 2024. So it's the cut that's postponed, but RBI may not hike. They could keep the liquidity tight. Remember, there was an incremental CRR on just the deposits that came in the last 2 months after the 2,000 rupee notes were called back. That CRR hike may continue. They may not call it off in September, in the September review, which they promised. So market is going to take it on the chin today. Expect banks to take it on the chin. In fact, all rate sensitives, NBFCs, Realty, all of them are likely to suffer because there will be a market rise in yields. How much the bond yields will rise, we will know only tomorrow. Even the rupee, for that matter, will take it on the chin. But that we will know tomorrow. Closed for today for Parsi holiday.
I'm only concerned about the tomato prices. I mean, what, 160 rupees a kilo now?
That's come down to 120. But that's immaterial. You will pay more for your home EMIs. You should worry about that.
Okay, all right, Lata. Thanks.
So
no pasta for you anymore.
Use puree. I read somewhere that puree sales are through the roof because,
eat eggs, 5 rupees an egg in Mumbai. That's an easier breakfast, a cheaper one. All right, let's dip into a quick break. On the other side, Anuj Singhal will be joining in for a quick trade setup. Also, our market expert Ajay Bodke will be with us for a fundamental stock analysis. Stay tuned.
Welcome back. Hope you're having a good morning. Well, Anuj joins us in the studio to tell us about how he's reading trade setup today. Morning, Anuj.
Morning, Nigel. Well, you know what? Obviously, the big talking point today is this inflation factor. Won't take too much here, but the fact that the CPI inflation is higher would be uncomfortable for the market, 7.44%. Of course, you could argue that most of it is because of veggies, but then it's like saying most of the market moves because of Reliance. I mean, that's part of the index, so you have to take that into account. So banks may continue to underperform. The dollar index is also quite sticky above 103. Brent, though, has cooled off to 85. That could be a bit of a relief factor. But, as you saw with the hike in windfall tax, that is going to be a bit of a factor for the market. The texture of the market is poor, notwithstanding the rally or the recovery that we had on Monday, because, we've seen FI selling of 10,000 crores in August itself. And if you take into account from the July expiry dates, almost 14,000 crores of selling. And while at index level we have not fallen a lot, Bank Nifty has fallen. Bank Nifty has now corrected about 5% from the top, though mid caps and small caps have been quite resilient. One space, or rather two spaces that you can focus on is are IT and pharma. IT and pharma are two spaces which are still showing you some kind of outperformance, clear risk of approach. In fact, if you look at this month, Nifty IT is up 3.7%. Pharma is up 2.1%, and you compare that to Bank Nifty, which is down about 3.5% this month. So any buying, if you want to do in this market, has to be around these two sectors. The Bank Nifty is showing signs of testing its 200-day moving average. It's still about 1,000 points or more than that away from here. 42,750 is that number. I think it's possible to see a correction down to that mark. And the best example of that is SBI, which has been the lead indicator for Bank Nifty. SBI on Monday actually closed below the 200-day moving average and is approaching June lows. Quickly coming to some index levels. On Nifty, the first support I'm watching out for is 19,349. That's based on the options. And the most important support is 19,258, which is the 50-day moving average and the Monday low. If you start to break that, then another 500 points downside opens up. On the Bank Nifty, which is the weakest component of the market, the levels that I'm watching out for are basically two levels. The Monday low, 43,776, and the 100-day moving average of 43,571. Having said that, global-led corrections normally are the best buying opportunities. It's just that from the trading point of view, perhaps the market is in for some correction.
Oh, absolutely. Thanks, Anuj, for that. And you pointed out IT, right? I mean, TCS, for example, from its April lows, the stock is already up about 10% plus. I mean, it had hit a low of around 3,000 and now back above 3,400. Thanks a lot for joining in. Well, market expert Ajay Bhodke joins us now to talk about that. Ajay, first a word on the technology stocks. There are, of course, big deals that are being won, whether it's Infosys, whether it's HCL Tech, and stocks are coming back as well. What would your pick of the pack be here?
Good morning, Sonia, and thank you for having me on the show. I think the string of deals, large deals that are being announced by some of the IT majors is making me constructive on the IT sector with the medium term. I think we've seen that there was a shocker from Infosys when they cut their revenue guidance to 1 to 3.5% from as high as 4 to 7%. And there was a correction in the stock subsequent to that. But the announcement of this deal has come on the back of two very large deals. Again, BP deal of 1.5 billion and a Danske deal of around $500 million. Although my discussion with the analysts is making me believe that this deal could possibly be earnings dilutive on the same lines as the past Verizon and Daimler deals. And also the contribution of this deal in the current financial year will be minimal. So although in the medium term, I think the accretion of such large deals will be looked at positively, but actual impact on the margins for the company in the near term is something which the market will be looking at. And from that perspective, I think, one can be constructive, but over the medium term in case of companies like Infosys. Insofar as telecom sector is concerned, because HCL Tech also had announced a very large deal in telecom sector. And Infosys also, now the current deal is related to telecom sector. What is also positive is if you look at one comment from Salil Parekh, I think this deal essentially is linked to two buzzwords. It is transformative AI, as well as it also talks about building on the cloud computing work that the company has done. Now, both these areas of cloud computing as well as AI are higher margin digital initiatives that the companies are embracing. And from that perspective, the margin trajectory, I think, could look up for some of these companies if they keep on pouring more into these two sectors. So that's why I think one needs to be constructive, but one should hold one's horses and not jump in immediately.
Okay, all right. Hi, Ajay. Good morning. What about Interglobe Aviation? Well, things have been going well for them, right? Solid earnings is what they're delivering. market share up, I think 600 basis points, or you have a large trade that will take place, so some part of that overhang will continue. Though in the near term, for 150 days, there's a cooling off period. How do you approach the stock? My problem is that ETF prices have started increasing. I think they're up more than 10% from the recent lows. Your view on the stock?
I think that would clearly act as a headwind. But if you just parse through the first quarter numbers, I think the company posted extremely strong, operational performance in the first quarter. The execution of the strategy has been perfect, and the market conditions also remain favorable insofar as comparative pressures on the other airlines are concerned. So I won't be too worried on the rise in ETF prices because I think the company has the pricing power to pass them on. The passenger numbers continue to rise. The load factors have improved in the last quarter. And the second quarter, I think the company has given a guidance of a 25% increase in capacity in terms of the ASKs. So I think, so far as the overhang of the stock selling is concerned, I think the market has already digested that. Mr. Gangwal has already said that over the course of 5 years' time, he would like to diversify out of his holdings in Indigo Airways. And that's why I think last September, I believe they had sold some 2.5 or 2.75% share. And now I think after nearly a year, the current tranche of $450 million is coming in. I think market has the absorptive capacity for the supply. And I think one should have Indigo as part of one's core portfolio.
Okay, got it. Ajay, just a quick word on actually two sets. These shipbuilders all saw massive rallies on Monday. Mazgaon, Cochin, Garden Reach, they were all up 10%, 12%. So there is momentum there. Any thoughts, anything you like there? And then just a word on ITC.
Yeah. So I think I'll take ITC first, Prashant. I think the numbers, I think, have been better than market expectations. I think the cigarette volume growth, which market closely watches at 8% volume growth, remains to be quite okay. And there, I think the stability in taxation regime, plus the enforcement agencies coming down hard on illicit sale of cigarettes, is something which acts as a tailwind for the cigarette sector. And for the first time, I think the FMCG revenues have gone above 5,000 crores in a quarter. And the margins also have looked up quite strongly. By nearly 3.25%, they have gone up to 11%. So I think that medium-term trajectory of FMCG margins is something the market which is excited about and looking for an upmove is something which will be positive. Of course, on the negative side, I think on the paperboard side, I think there are emerging concerns because internationally pulp prices are coming down. The supplies from China are increasing quite rapidly. And both the domestic and export market, the demand is remaining subdued. So that, along with, as Lata has said, rising food inflation in cereals is making the government worry. And that's why we are seeing clampdown on wheat and rice exports. And that's why the agri-business has taken it on the chin. If you look at the agri numbers, I think they're down 24%, the sales in the quarter. But if you leave out these two wheat exports, they're still up around 31%. So overall, I think ITC continues to be, I'm constructive on ITC. I think it should be part of one's core portfolio. And so far as hotel business is concerned, I think the last year's base was very high. So one should look at the hotel numbers from that perspective. They're a bit subdued, but overall, I think one should be positive on ITC.
Okay.
And so far the shipbuilding question is concerned, I'll take a second. I think the Prime Minister's announcement about the PSUs being looked at favorably had benefited PSU banks as well as some of the other PSUs in sectors like defense, space, railways. In my opinion, in many of these shipbuilding as well as defense companies, one needs to exercise caution. The book to build is very strong. The government's emphasis on Atmanirbhar Bharat will continue to see that large orders continue to come in. But let us not forget that the market has got too euphoric. Any announcement of an order leads to an increase in market cap, which is, significantly, say a 2,000 crore order. If it's going to lead to a market cap increase of, say, 1,000 or 600 crores, let's not forget these are long-term orders. There are execution challenges. Raw material prices increase, whether the pass-through is fully there or not, we don't know. But I think we have been there previously when BHL also used to trade at a very high price. I'm talking about pre-2010. Book to build was very high. But then I think the slow-moving orders did it in and the margin profile deteriorated. So I think positive, but please be cautious in railways, space and defense names.
All right. Well, we thank you for joining us, Ajay. Have a great day. And thanks for being with CNBC TV18. Let's slip into a quick break. On the other side of the break, Mitesh Thakkar and Sudarshan Sukhani will join in for some technical trades. Stay tuned.
Okay, welcome back. We've got the market, which is, I think, we're going to start trading the pre-open in about 4 minutes' time. The implied open is still about 70 points lower. It's pretty much like what we had the setup on Monday morning. You know, similar kind of start, indicative. And then, of course, I mean, you know, we got a swoon. The Nifty was down 150 points at one time early on, and then there was a recovery. Mitesh and Sudarshan are with us with what you should be doing and the new trades you should be taking on. Gentlemen, good morning. Good to have both of you here. Mitesh, how would you look at things? I mean, Monday we got that bounce, but things are still looking a little tricky, aren't they?
Good morning, Prashant. So I think, you know, I've been maintaining that the markets will go through a deeper pullback and maybe some kind of a time-wise correction. And while we may not be in a downtrend, the near-term texture is slightly sell and rally. So I think, you know, we did cover a good part of our short positions on Monday because 19,200 to me is a very strong support, and we got very close to that, about 50 points away from that. So closer to that level, I think, you know, we'll again see if the market can take support and give a reversal sign in case we reach those levels. And then I think, you know, on the upside around 19,550, 600 is an area which I would want to explore shortly. So it will be a market very choppy range, but as long as we are above 19,200, I think, you know, we should be in good stead on the medium term to slightly longer term charts. But the immediate term charts are slightly on the weak side. So, you know, you would want to trade accordingly and be fast while trading in the range. Try to buy near the lower end of the range and try to sell near the upper.
Okay, Sudarshan Sukhani is also with us. Sudarshan, what are your thoughts on the index? I mean, it's a tricky zone, right? Because we haven't had a correction in a while. Do you think a correction is coming, and what's the approach now?
Yeah, good morning. See, we are already in a correction. So my voice is echoing. We are already in a correction, and the point really is on which I made on Monday also. Inside a correction, it's very difficult to trade. So please do not try to do any kind of trading. It's going to be a big mess and choppy markets, correcting markets. You are going against the primary trend, which is up, and the market is coming down because it's going through a short-term downtrend. So two conflicting trends with each other create a lot of chaos. So stay away from the Nifty completely. For the Bank Nifty, the story is very different. It has confirmed a very bearish pattern. So while the Nifty can follow the Bank Nifty downward, it is the Bank Nifty which is giving clear signs of significantly lower levels. There, buying put options is justified. So for the Nifty, stay away. For the Bank Nifty, look to take a short position only using put options.
Okay, let's do one thing. Let's take a quick break. On the other side of the break, we'll continue talking about individual stocks. And we will also have C. Mithun Chand of Kaveri Seeds to talk about the quarter gone by. Stay tuned. Welcome back to Bazaar Open Exchange. Well, let's talk about individual stocks now, what you should be doing today. Mitesh Thakkar and Sudarshan Sakani are still with us. Sudarshan, if the view is that we are in a correction and perhaps there's more downside in store, what do you do with individual names now?
There are some names which are actually lending themselves to selling also. One of them is Hind Petro. Actually, a lot of them. It's an intraday short with a stop above 267. Ultratech Cement is now confirming a very bearish pattern, just like the Bank Nifty, although they are different sectors. It's an intraday short with a stop above 8145. And finally, the only buy I have is Balkrishna Industries, which is standing at support. Now that support may or may not hold, so please follow the stop losses. Consider a positional buy with a stop under 2300.
Oh, okay. All right. Thanks for that, Sudarshan. Mitesh, what about you?
I have a mix of buy and sell calls, Nigel. On the buying side is LTIM, an IT name, and IT still looks good to me. That's a buy above 52.05, which is just above Monday's high. Buy then with a stop at 5165 for targets of 5300. A buy on NMDC. Disclaimer, I have some bullish delta spread positions on these stocks, so there's vested interest. But there was good movement happening on Monday, suggested some kind of a breakout. So buy here with a stop at 116 for targets of 127. And on the selling side is Ultratech Cement. Again, a disclaimer, we have recommended this to our client as well as our put option positions over here. So vested interest is there. So sell here with a stop just above 8100 for targets of 7925. And finally, one pharma name on the selling side, which is now showing first signs of profit booking, that's Glenmark. We keep a very tight stop at 807, look for targets of around 777.
Okay, all right. Thanks a lot for that, Mitesh as well as Sudarshan. We'll keep coming back to y'all. For the time being, let's get in Rajesh Palvia, the VP Technical and Derivative Research at Axis Securities, who joins us on the show. Hi, Rajesh. Morning. Hope you're having a good one. Well, tell us, what are the trading calls you have for us?
Good morning, Nigel. So market is choppy. We are witnessing, supply pressure since last couple of trading session. A lot of call writing activity is happening at 19,500, 19,600 strikes. So these are the level where, Nifty is likely to face some more supply pressure if any pullback comes in the market. On the other hand, we are almost trading near to the put concentration base of 19,400. If at all, if it slips below 19,400, then possibly another round of selling pressure we can see in the market, and Nifty can go down further towards 19,300, even 19,250 in the continuation of this supply pressure which we are seeing. So to play this down move, we are initiating here to buy put option of 19,400 strike, which was closed at 46 rupees for this weekly option expiry. We are projecting target of 95 to 100 rupees for this put option. One can keep a stop loss of 15 rupees to buy 19,400 put option. On the other hand, if we analyze the Bank Nifty setup, we are almost trading near to very critical level of 44,000. If we breaks below and if we sustain below to 44,000 level, then we can see furthermore sell-off in the Bank Nifty also, and then Bank Nifty can slide further towards 43,600. That is the next major support area based on the put concentration. So in the previous session, both indices have witnessed short built-up activity. So furthermore supply pressure we can see in the today's session also. On the stocks front, we are bullish on trend, and we expect that trend can continue furthermore upside as the overall structure long-term, short-term is on the bullish side. There was a long built-up. So we expect trend can continue furthermore upside. On the higher side, we are projecting target of 1970 to 1980. Keep stop loss of 1895. Another stock which we like from on the long side, that is HL. In the previous session, a strong buying action was witnessed, and we expect that HL can continue furthermore upside from the current level, and possibly upside we can see a target of 3940, 3960. One can buy with stop loss of 3855. One stock on the short side, that is Laurus Lab. This is the fourth consecutive day where we are seeing lower high, lower low formation. It clearly suggests that sustained selling pressure is there. So Laurus Lab one can short for a lower target of 370. Keep a stop loss of 390.
All right. Thanks a lot, Rajesh, for that. Appreciate your thoughts. Have a good day. Let's move on now. Kaveri Seeds is on our radar. It was a good quarter for the company. The margins expanded by 200 basis points. Their cotton volumes were stable and the revenues increased by about 9%. C. Mithun Chand, who's the executive director at Kaveri Seeds Companies, joins us now to talk about that. About 45% of their business comes from non-cotton, which is rice, maize and veggies. Mr. Chand, good morning and thanks for joining in. For the non-cotton portfolio, rice, maize and veggies, can you tell us what was the volume growth this time? What was the kind of value growth or price appreciation that you saw? And what is the sustainable trend for the next couple of quarters?
Good morning. This year was a really tough year. We had a start of the monsoon was very bad. It has been delayed to some extent, and after that we had a continuous rainfall in most of the states. But even in these tough conditions, we were able to maintain our volumes. Say in terms of cotton or hybrid rice, we were able to maintain volumes, and we have grown in terms of the revenue. And in terms of research paddy, the revenues are up by more than 22%. Only in maize, we had a downtrend in volumes, basically because of the monsoon. And this year, we had a volume constraint and the prices were also firm. So we have not supplied for the government subsidy. So that has also impacted with 1,000 tons. But we are pretty sure going down the line with the spillover sales in the second quarter, and we'll see a very good Rabi coming up in the second half of the year. So we see even the maize volumes will be up compared to the previous years. And if you compare from last year to this year, overall the margins have gone, revenues have gone by 5%, the margins are up by 12%, and the EPS
Mr. Chand, I'm aware of the numbers. I want the exact volume number for the non-cotton space. You said that maize volumes were under pressure because of the rain situation, but can you give us the numbers? How much did the volumes fall by in Q1, and what is the expectation for the full year, FY24? In the non-cotton
In terms
business?
of the cottons, we had the same number of volume, like 54 lakh packets. And in terms of rice, we have done close to 6,000 plus tons. And in terms of research variety, we have done close to 16,000 tons. But in maize, we are down by close to 2,000 tons of volume. But 1,000 tons is contributed by subsidy, which we have not participated in this year. But the other 1,000 tons, we are pretty sure that we'll cope up in the second quarter and the coming quarters.
Okay.
So in terms of the vegetables, the volumes all remain same, but we have not seen growth in the first quarter, but we are very confident in the second and the third, fourth quarter we'll gain volumes as well.
All right. Very quickly, Mr. Mithun, then you said that there is some bit of spillover, right? So quarter one is the largest quarter, then it's followed by quarter two. So quarter two, do you think relatively it will be a better quarter this time around in comparison to what you've done in the previous years? Normally you've done, I think, between 150 to 165 crores.
Sure, second quarter will be a better quarter because we might increase sales in maize, which is a major contributor in second quarter. We have seen a spillover sales in maize, and some part of vegetable will also come in. So these few exports are also there for the second quarter. So by keeping all these factors, we see a growth in second quarter compared to the previous year.
So the growth will be what, 10% higher, 15% higher?
Second quarter is a somewhat lean quarter, but it should be more than that.
More than that. Okay, relatively better quarter. The other point is, besides the operational performance, Mithun, you have a good amount of cash in your books, right? What is the cash in the books right now?
The cash in the books as on 30th June is 740 crores compared to 560 crores last year. We have generated good cash in the last 3 years.
All right. Mithun, getting to the point, your investors are worried, business is a little bit volatile, it could have up and down cycles. But the cash in the books, the buybacks or the dividends that are paid isn't cutting it for them. How do you plan on utilizing this cash in your books? Is there some inorganic growth? Can you put out a bigger dividend payout?
So if you see in the last 5, we are a dividend-paying company. Every year we pay dividend, and in the last 6 years we have done 5 buybacks. We are open for any or inorganic growth. If we see any opportunity, we'll definitely buy for it. If you recollect our conversation a couple of years back, maybe 5-6 years back, we said that we require 300 crores of cash as a war chest. Over and above 300 crores, whatever is there, we will distribute to the shareholders. That's what we were doing it. And I think the board will even continue to do the same thing going forward.
Okay, got that. Can you tell us what is the market share exactly at the moment now in the cotton business?
In the cotton business, we are close to 15% market share as of now. In hybrid rice, we are close to 10%. And in maize, we are close to 10%.
Okay, 10% in maize and 15% in cotton. And how much do you think you can grow it by the end of FY24? How much can your market... Okay, I think we snapped that line. All right, let's do one thing. Let's move on because we have a market to trade as well. Looks like it's going to be a weak start, down about 70 odd points. Sudarshan is back with us. Sudarshan, what's the call at 9:10 this morning? Okay, we'll go to Mitesh actually because I think there's some issue with Sudarshan's audio as well. Mitesh, what's the call at 9:10?
I'll go with a sell on Ultratech Cement. Keep a stop above 8100. Good chance that we'll see levels close to about 7900.
Okay, a couple of stocks that you'd perhaps want to look at. One of them is Infosys, of course, a big order that they have won. And the other one that we're looking at this morning is also, a couple of names like M&M, which are up almost about 0.7%. But Indigo is in focus as well after the Gangwal family is looking to sell another tranche of stake in the company via a major block deal that will happen in just a while from now. This is the third tranche of selling from the Gangwal family. They're looking to sell another 4% stake in Indigo today. And the indicative price is about 2,400, which is about a 6% discount to the current market price. Now, the Gangwal family holds a little under 30% stake, and with this stake sale of 4%, they will be left with another 25.7% stake. So there could be a little bit of overhang on the stock today. However, the core business is doing very well. The core business is, there are record highs in terms of profitability as well as revenues in Q1. Domestic traffic, as we know, has picked up in a big way. Fuel prices have cooled off. Yields have been favorable, and all of that has led to a big move in the stock as well. So this overhang will definitely be there of the promoter selling stake, promoter family selling stake, but the core business is something that has looked very good. But VIP is also in focus. There are some resignations there. Mangalam is here to tell us more about that. Mangalam.
Well, that's right. So VIP's MD, Anindya Datta, has resigned citing personal reasons with immediate effect. And this is interesting largely because his predecessor also resigned, after being 3 years at the top. That was Sudeep Ghosh. And that makes the current MD designate, who's Neetu Kashiramka, who's ex-Jyoti Labs, and the current CFO of the company, the third MD designate in just the last 5 years or so. Remember, Neetu Kashiramka joined the company just about a couple of months ago as the CFO in May 2023 itself. It'll be interesting to see how the street takes it, largely because such frequent management changes in promoter-owned companies or family-owned companies is not usually viewed favorably. VIP as a stock has been underperforming not only its peer Safari Industries, but also the larger recovery that we've seen in the travel theme, so to say. And in the last 6 quarters or so, the company's financial metrics have actually been lower than its peers itself. In fact, even in the first quarter, the revenue of the company, while it grew in single digits, we saw the EBITDA decline, and as a result of which the margins came off all the way from 17% to sub 13%. So let's see. You see the stock selling off today, but at lower levels. Will that be priced in or not is the big question.
All right. Thanks a lot for that. So we just have about 30 seconds left for the markets to open. And the key pocket to look at this morning will definitely be IT on the back of Infosys and that big order that they've won, €1.5 billion order. But not just Infosys, right? Look at all the stocks. I mean, Tech Mahindra is up about 10% this month already. It's up 20% this year. HCL Tech has gained quite a bit, actually. It's up 15% from the lows in April. So there's definitely a big comeback that you're seeing in the IT space. Apart from that, M&M on the back of the launch of the lightweight tractors is something that's doing very well this morning. So it's up almost about 0.8%. And plenty of other stocks, whether it's Eicher Motors, Maruti Suzuki, also holding the market up. On the downside, though, it is banks and Reliance that could drag their feet. But let's take a look at the first hit on the index. The Nifty is down about 82 points, so not a good opening at all. Sensex is down about 260 odd points, while the Bank Nifty is the one that's really, dragging the markets lower, 440 points in the red for the Bank Nifty. So let's take it from there. HDFC Bank, ICICI Bank, all under pressure. SBI down about 1%. Hindalco is down 1.5% as well. And Tata Motors is also under pressure. So these are some big losers. Reliance is not participating on the upside either. So that stock is down about 0.7%. But primarily it's the banks that's dragging the markets this morning. On the upside, Infosys posts that big order. Tech Mahindra looking decent. Nestle, L&T. But the gaining stocks are few and far between, really. It's a weak start. It's a start where the Nifty has already lost about, 107 odd points. By the way, I think that block deal on Indigo has taken place. About 1.6 crore shares have traded hands right now. So we'll keep an eye out on that. About 4.2% equity has exchanged hands at the moment. So we'll just get that going. But for now, market not a good opening at all for the frontline.
Well, that's right, Sonia. And a few stocks in the broader markets are taking it hard on the chin, actually. HOEC, that stock's down closer around 13%. I think is reacting to its numbers. So that one, volumes as well, very, very high out there. You have Vodafone Idea that's mildly in the red. Hindustan Copper is down closer around 3.5% reaction to its numbers as well. On the flip side, you have a few stocks that are doing rather well. JSW Energy, in Monday's trading session, your GQG partners had bought more than 1 crore shares in the company. This morning as well, there was a large trade. So JSW Energy is one of those stocks that are doing very well in open. Pennar Industries, they won a large order. So that stock's up close to around 6% as well as we speak. HCC has moved up close to around 3%. You have Suzlon that we will have the management in a short while from now that will be joining us on the show as well. But that's another one of those stocks that are doing pretty well. I think for the markets today, the problem is the banks. They are down close to around 450 points. And in the first few minutes itself, the Nifty Bank has breached the lows that we saw on Monday. So that's going to be a bit of an important zone. 43,500 odd. We were highlighting this earlier as well. That's going to be one of the crucial marks on the Nifty Bank. So let's see how this goes. 100 EMA at 43,572. Keep an eye out. We're 100 points away from those levels. Prashant.
It's almost like what we had on Monday, almost a repeat, at least so far this morning. The 100-point cut there. Let's see, we get a bit of a recovery in the second half of the day, like what we saw. I mean, actually, on Monday, it was the day's low early on, and then almost all of the session, the market spent climbing up, creeping higher, and erasing all those losses. So it was a pretty decent bounce. All right, let's just take a quick look at what else is happening. HOEC, I think we highlighted down 14-15%. Hindustan Copper down 6%. These are coming up with very large volumes. Hindalco is another one which is down about 2%. Bombay Stock Exchange, BSE, that is coming up with about a 2.5% cut. But volumes at this point are not that large. I can spot Jubilant Food, which is down 2%, which is coming up on some volumes. Uflex is down some 6%, 381. VIP, 1.5% cut, not more, at least not right now. Kirloskar Brothers is down 4.5%, stocks at about 830. There is Crompton, Chennai Petro, which are in the 2% zone in terms of losses that we have at this point in time. Tejas Network, of course, I mean, this morning there was an exchange announcement where they said that they've got a very large, almost $1 billion worth of order from, I think this is with regards to the 5G rollout for BSNL. So that is up about 5% in volumes. And I was talking about shipbuilders earlier. So Garden Reach, after Monday's 11% move, is up another 4% this morning. And we had the management, by the way, with us on Monday morning. And they sounded pretty confident. JSW Energy, look at Religare. Religare is at about 232, 6% move on large volumes. Ujjivan is coming up with about a 3% odd gain. Supreme Industries, a little bit of sort of up and down, but 2%, 2.5% higher on Supreme Industries. So results, markets did not like, but then there was that surprise MSCI inclusion, and the stock did recover a little bit. So that's the long and short of it, at least at open. We're down about 80 points, 19,350 is where we stand. Well, our market master is ready with us. Kenneth Andrade is founder and chief executive officer at Old Bridge Capital Management. Kenneth, good morning. A pleasure to speak with you here on CNBC-TV18. It's been a while, so welcome back. Let's just, Kenneth, try and sort of understand your thoughts on, very briefly on what markets have done so far, whether it's been, within limits of reasonableness, because markets have done very well, especially the small cap part of the market. Are you uncomfortable with that? And what next, really? near to medium term, how are things looking?
So I think markets just reacted to all the good news that's there in the corporate world, right? And if you go back to the quarterly numbers and as they roll out, there are hardly any disappointments that are there in the entire in this quarter numbers, or even if I step back into last year's numbers. So markets effectively reacting to all of that. Now, all said and done, it's been a great 2023 so far, and the undervaluation that, or some part of the undervaluation that was there in the last year, has evened itself out, and some part of the market continues to remain reasonably expensive. So the disappointments, the limited disappointments that you had in results, markets reacted to them fairly sharply, and I think that's the way it goes. Valuations are high, but all the results and all the events that are taking place are fairly positive on as far as corporate India is concerned. So I'm not too worried about the cycle. Obviously, at these valuations, the returns are all pushed backwards, given the fact that everything is trading fairly well at this in today's market scenario.
Kenneth, hi, good morning, and thanks for joining in. But at a time when this market has not seen a major correction up until now, that's the fear, right? That there could be a large correction coming. What do retail investors do at this point in time? Do you take a pause, raise your cash levels, wait for better times to deploy fresh money in? What's the best approach now?
So as far as the large corrections are there, I think, Sonia, we have already been through one phase between 2019 to 2021, right? And the economy got stress tested during that period. Now, when you stress test the economy, hardly any bankruptcies came through. In fact, the reverse happened. All companies actually cleaned up their balance sheet and everyone become cash positive. So even if you have a correction, my sense is unless there's a significantly large event that takes place, the corrections will be incremental and they will not be very large. Because we know at the bottom of the entire economic cycle, we came through with flying colors, right? Now, the only risk that the market faces is in valuations. And when we talk about valuations also, this is also on context on future growth. And trying to guesstimate future is always going to be a challenge. It's always been a challenge, right? It's not an Excel sheet that you drag towards your right and you get growth. In terms of growth, I think the domestic environment, government spending is right up there. You can see infrastructure taking place, and you can see a lot of other industries actually participating. Because of the trade realignment, I mean, a lot of corporates in India have gone outside. A lot of industries in India have gone outside and gotten incremental market share. Now, how does that translate into large corporate earnings and large reinvestment that has to take place? Now, when I talk reinvestment, I'm talking about the capex side. And some part of that is already visible, but not a very significant part of capex that we require is going through at this point in time. So I think that's where the challenge is. As far as retail investors are concerned, I think the risk on capital is not there. You have to put money incrementally into the market and keep some firepower should there be a reasonable correction. I think that's the approach at this point in time. If you had asked me last year, 2022, there was hardly any risk and valuations were in favor. Today, there's hardly any risk, but valuations are not in your favor.
Hi, Kenneth. Good morning. Kenneth, I wanted to ask you about some of these unlocked trades, that have done very, very well. Post-COVID, you've seen a big resurgence in terms of hotel stocks out here. You have the aviation stocks. There's only one big play out there, Interglobe. And the luggage industry as well, a lot of these stocks have done well. Are you all playing any of these themes, or have you all stayed away from any of these?
It's there in bits and pieces, Nigel. And if I look at hospitality as a whole, I think the entire value chain has done reasonably well. It's also gone to a level wherein capacities are just not coming into play at the time which is required. So the strength in pricing will retain, balance sheet will continue to be there. And you are seeing elements of capex in the entire cycle. You're seeing expansions taking place by every single vertical in that entire chain that is there. So it could take about 3 years or 4 years for new capacities to come in. Till then, the pricing power is in favor of all of these companies. Again, they are trading very close to valuations where they have never traded before. But there's enough of merit to say that some of these businesses will become significantly stronger in the next 3 years. So you can participate. It's a stock-based approach that is there, and I think there is reasonable amount of value. There's still reasonable amount of value in some of these businesses.
Got it. Kenneth, we just spoke with, I think, what has been one of your portfolio companies for a long time, Kaveri Seeds.
Yes.
I don't know if you heard the conversation. I don't know if you still own it, but you like that theme, right? For a long time, agri-commodity businesses, Coromandel, Kaveri, Chambal. Are you still bullish on that space, and in what way? I mean, if you can name names, that will be great.
So, I mean, my only concern in that business is that cyclicality has gone on for a little too long. I think 2000, in the seeds business more specifically, none of the seed companies have done very well for now the last 5-6 years. Okay, for the fertilizer companies, I think it's much easier. A lot of them did extremely well. Some of them are trading at their historical highs. But in the seed business, I think hopefully they should come through in this cycle, and it's not just one company; it's the entire industry. Hopefully, this should be the end of the entire cycle, at least for some of these companies. So we like the space in bits and pieces. We've done some exits also, but there is fair amount of value. But till growth doesn't come in, I think a lot of this industry will still trade where it is.
So you own less of it than say even 6 months ago, right? I mean, so it's not a big bet anymore in that sense. Can I put it that way?
I think, Prashant, the reverse happened. The others have outgrown the size of this position.
Okay. Yeah. Okay. All right. Fair enough. Got it. Now, the other space which you liked was, I remember when we spoke last, was the QSR space. Is that something you still are bullish on? Because consumption has been kind of weak, and it's kind of showed through in many of these QSR names as well. Your thoughts?
So they should get their act in order this year. I think there's been a massive rollout of capacity. When I say capacity, in terms of new stores, and all of them are grappling with two things. One is an expansion, and second is also with lower spends in the entire economy. And it's impacted companies which have impacted companies in the discretionary sector. So it's not just QSR, it's also some of the retailing businesses that are there, government retailing businesses that are there. So it's across the board. It's a very stock-specific approach that you probably have to work out there. But all said and done, it's a fairly large opportunity in any developing country that is there, or developing country moving to a developed opportunity. And market caps are definitely in your favor. Okay, from the size of opportunity to where market caps. Now you need patience to go through the cycle. And if you want to capture it in entirety, you have to be early to this space. So it's the first time that the QSR cycle is going through a downturn. It will be interesting to see how many of these companies come through with higher market shares and which category actually wins.
So,
but I definitely.
Yeah. Okay. Got that. I wanted to ask you about a couple of other spaces. Of course, one of the best performing spaces this year has been autos, and there's so much happening there, especially in the electric vehicle category. If someone has not participated yet, have they missed the bus, or is there more to go? And which are the pockets that you would like here?
I think in automotive, you had a terrible period right up to 2021. And a lot of these companies are catching up for lost time. Now, it's a size of the market that can only grow. You've come to a level where the market is, we're almost at a maturity stage in the market, whether it's two-wheelers or whether it is four-wheelers, and you've got a shift in technology. Now the legacy business in terms of distribution is doing well, and a lot of that is captured as far as valuations are concerned. So there will be incremental growth from there. The new space that you rightly pointed out is the electrical vehicle space that is there, or the change in technology that is there. And a lot of the listed businesses are actually downselling their EV business or the electrical vehicle business to other investors, whether it's private equity or whether it is strategic. So the existing shareholders on that in the business has a lower participation into the electric vehicle business, which is sitting in the companies itself, in the listed companies itself. So I'm not too much in favor in how the structure plays out. I mean, a lot of the larger corporates are diluting their stake in the EV business at the expense of the public shareholders at this point in time. So that may not be the best thing to happen in the longer term for a lot of public shareholding, which is sitting in companies at this point in time. All said and done, it's going to be a fairly relevant sector in India. And if you see how the market is actually shifting, it's steering up in terms of price points, whether it's inflation or whether it is higher realization per vehicle or premiumization of the entire market. I think that trend is playing out fairly well. So you need to be there and you need to capture it. I definitely prefer the vehicle manufacturers to the automotive ancillaries out there. But we'll have to just wait till at least from our perspective, we just have to wait till things get a little better as far as entry levels are concerned.
Okay, all right, Kenneth. Always good hearing your thoughts. Thanks so much for stopping by. Hoping to bump into you in Bandra sometime. We live just down the road. So looking forward, Kenneth. You have a good day today as well.
Thank you very much. Thank you.
Well, time to move on then. Glenmark Pharma, well, it reported a decent set of numbers in the first quarter. Revenue growth was better than expectations. Margins were more or less in line. Mr. V.S. Mani, the Executive Director and Global Chief Financial Officer at Glenmark Pharma, joins us on the show. Hi, Mr. Mani. Good morning, and thanks so much for speaking to us.
Good morning to you.
Well, let's focus on the way ahead first. You laid out a guidance for FY24. So is that on track? Revenue growth, will it be better than the 10 to 11% since the first quarter you have started off, quite well? Margins you were guiding for 19 to around 20%. Do you hold on to that? And also, what about your debt reduction plans? What will your debt look like at the end of this year?
Sure. Thank you very much, and good morning to everybody. So, first and foremost, I would like to give a bit of color on the overall performance. So, we had a quarterly revenue across all geographies at about 3,400 crores, which is effectively about 22.5% growth. And as well as the EBITDA margins were closer to 19%. So, you are right, in terms of our guidance, we had guided the street to about a 10 to 11% growth in revenues, as well as about a 19 to 20% EBITDA margin. So we would currently like to hold on to these guidances, and we'll see as the year goes by if we need to do any change to the guidance. Okay. So overall, good quarter. I mean, the businesses going forward also seem decently good. We have a number of good launches coming up. So I think all in all looks okay. As far as the debt reduction goes, I'll respond to that. As far as the debt goes, we have a gross debt currently of about 4,400 odd crores and net debt of about 2,900 odd. With this improvement in the overall quality of business, as well as the improvement in the margins, and also keeping our capexes in good, managing it well in terms of 600 to 700 crores, as well as keeping our R&D expenditure between 8 to 8.5%. I think we are hoping to have some decent cash generation as we go along to bring down the debt as well.
So any targets that you would have? This gross debt at 4,400 crores, how much do you think you can bring it down to by the end of the year?
So we had given a guidance that during our last investor conference that by 26 we should be net debt, positive. I mean, negative sort of overall
debt free by 26.
The debt being negative. I mean, there will be no debt as such in the books. So I think we are along close for that.
Okay, so you're saying that the company had guided to become net debt free by FY26, and you're on track to do that. Got it.
Yes.
Mr. Mani, Mr. Mani, the big issue in the last couple of years was pricing pressure in the US, right? The last time when we spoke with you, you said that there are signs of the pricing pressure stabilizing. But just wanted to understand, how is the US market doing now, A, in terms of pricing, and B, in terms of growth as well? What do you think sustainable growth could be? Because this quarter was very strong, the America business.
Sure. So I think our overall revenues, we are seeing about 100 million in terms of the US, $1 million per quarter. So I think that's good traction, and we see a single-digit growth in the US in this current year, about a mid-single-digit growth. And as far as the pricing pressure goes, it is still at about 6 to 8%. But I think we have a couple of good launches. So with the launches and the growth in the volumes, we should be able to take care of it.
So you're saying the price erosion is 6 to 8%?
Yeah, 6 to 8% would be the sort of pricing pressures in the US.
Okay. And this single-digit growth that you're looking at, $100 million per quarter in the US business is the run rate that you're expecting. How much did the regulatory issues impact the business this time around? I mean, any timeline in terms of when we can expect either remediation process to get completed by the US? And once that happens, do you think this run rate could improve?
Yeah. So absolutely, because obviously the US facility has got injectables. Okay, so that's something that is very much required in the US. So I think most of our remediation measures that we were planned in the US are all done. So I think we should see minimal remediation costs in the US. But obviously, if this comes out well in the coming year, we're able to start on the exhibit and the engineering batches in the Q3 of this year. We should see the overall. I think it will. The US business will add to our. I mean, the facility will add to our growth in the coming years. May not be in the current year, but in the coming years, it should definitely add to our growth. Okay. So all in all, I think if these all the measures that we have taken on the remediation work out well, we should see a good growth in the US in the years to come by.
Right. Mr. Mani, just to kind of complete the loop earlier on about the guidance, etc. So you said the revenue growth is 10 to 11%. That's what you said?
That's right. Yeah.
Margins between 19 and 20%.
Yes.
And $100 million quarterly run rate from US, which you've maintained. And you said pricing pressure in the US is now is fallen to 6 to 8% per year.
Yes.
And this is much better, right? When things have come off quite a bit. The pressure has come off quite a bit.
Yeah, as you see, there was a lot of pain over the last 3 or 4 years in terms of sometimes even double-digit.
No, that's what I'm saying. I'm saying it's gotten better. It's gotten better.
It's gotten better. Absolutely.
Yeah.
It's gotten better.
All right, fair enough. Got that. Now, could you give us some guidance, Mr. Mani, on the respiratory portfolio, which includes key drugs like Ryaltris? You had guided for $40 to $45 million of sales from the drug. And could you tell us, I mean, are you running ahead of this particular number already in terms of a run rate?
Yes. So respiratory, I mean, if you look at it across geographies, we have done well. And Ryaltris specifically, we had guided to a 40 to 45 million. In the first quarter itself, we are at about 10 to 15 million. So we see very good growth in this in Ryaltris. And as you know that we have launched it across most of the geographies, US, Europe. And in Europe, we also have good partners like Menarini. And apart from that, in some of the other markets like Russia, South Africa, and also some of our partners in Australia as well as South Korea are doing well. So all in all, respiratory as a portfolio is doing well. And even in India, if you can see that over the years, we have been sort of second in the respiratory segment. So we've come a long way. And across all geographies, our respiratory products are doing well, be it Europe, be it some of the emerging markets. So I think overall, it's doing well.
Okay, all right. Mr. Mani, so you've given us a fair estimate about how you see operational performance going ahead. But let's talk about the other company. That's Glenmark Life, which is listed. Now, Glenmark holds close to around 83% stake in Glenmark Life. So either you'll go ahead, you'll bring the stake down by 7 to 8%. I think you'll got more than a year to do that. That's by August 2024. Or the other point is that, reports are indicating that Glenmark could be looking at selling Glenmark Life to Nirma. Can you clarify on that?
No, I mean, I would like to just say as of now, basically we would like to bring down the minimum public shareholding down to 75%, that's 7 to 8%. And there's nothing more to report on that beyond that.
The block? Glenmark Life is not on the block?
No, 7 to 8% is what we are looking at divesting as of.
Okay, all right.
Okay, so 7 to 8% is what you're looking to divest at the moment. And I'm sure a lot of these funds, I mean, of course, you've also spoken about in the past that the funds that you would be raising would be used to deleverage the balance sheet. Can you tell us what is the plan? How much could be used to deleverage the balance sheet? And by the end of it, I mean, of course, you gave us your net debt numbers, but what's the plan in terms of this divestment and how much would be used there?
So actually, we have a time frame up till August of 24 to do this. So we're hoping to complete it before that. So whatever comes will all be used to to reduce our debt.
Okay. I wanted, you told us about how the US business will see single-digit growth. I wanted to know a little bit about the India business. You're barely doing a 3% growth year on year. I think because of that price revision, the NLEM price revision, so I understand that. And there's also a slowdown in the acute segment as we discussed earlier. But can you tell us, this single-digit growth is something in the India business that can continue for how long? Will it continue to be low single-digit growth for FY24? And when do you see recovery come through?
So I would like to, first of all, say that if you take into account some of the divestment of non-core brands that we did last year, and apart from the NLEM impact that we had, if you were to take all this into account, it would be like a 8% growth in the current quarter. I mean, even if you look at basically IQVIA MAT, June of 23, again, we grew at about 13%, okay, vis-a-vis growing at about, the industry growing at about 10%. So I think I agree with you that due to the slowdown on the acute segments, we would guide to a single-digit growth for the current year. But overall, the quality of the business and the growth over the years have been very good, and we continue to grow ahead of the industry. So I think wouldn't look too much into the current quarter, because as I explained, that if you were to take out the effect of the divestment of non-core brands as well as the NLEM impact, we would be at about 8%. So I think over a period of time, it will sort of level off.
Mr. Mani, just a very quick question before we let you go. The point on Glenmark Life, this 7 to 8%, are you likely to do it in the coming quarter? And also, will it be an OFS, or will you do a preferential allotment to a couple of parties?
So we will take it as it comes, but it will definitely not happen in the coming quarter. It could be a little longer than that, as we have time till August. Okay, so we'll take our time to plan that.
Oh.
And the business is also doing.
Okay, all right, Mr. Mani, the shareholders like it as well. I mean, the last 6 months, the stock is up 70%. So all the best for the future. Thanks a lot for joining in and speaking to CNBC-TV18. Thank you. Let's slip into a quick break. On the other side, we'll connect with Sanjeev Asthana, the Chief Executive Officer at Patanjali Foods, to discuss their Q1 earnings. Stay tuned. Right, Patanjali Foods is on our radar for Q1 earnings. The company, if you remember, a couple of days ago reported their numbers and witnessed a sharp contraction in margins, while the correction in edible oil prices hurt their EBITDA. Also, the edible oil business has reported an EBIT loss this time. So let's find out more about that. Sanjeev Asthana, the Chief Executive Officer at Patanjali Foods, joins us now to talk about that. Sanjeev, thanks a lot for joining in. Can you tell us, on the margin picture itself, there was a sharp contraction this time around. What is the expectation as we move along? And what is your market share in the edible oils business now? The last time, I think you said it stood at somewhere around 8.5%. Has there been any change to that? So both on margins and on market share, what's your view?
So thanks for having me on the show. Two quick sort of reasons for this contraction in the margin that we witnessed. That the global prices on the futures exchange, where we hedge our risk, both at Chicago as well as at the BMD, those markets went up nearly 10%, but the domestic markets did not react at all. And so they marginally went up. So on one side on the hedges is that we had to give up some money into the book losses, as well as on the accounting standard, a lot of mark-to-market sort of we had to take in the account quarter end. This quarter we're expecting, and the quarters going forward, I think this trend should get reversed. And pretty much on course for the whole year, we're expecting between 2 and 4% margin from the edible oil business. And I think it should be viewed also in that perspective with a longer term time frame. In terms of the market share, we are pretty much 9%. Our volumes have grown nearly 35% from last year. So there's a very steady growth that we are getting compared to between 3 and 5% growth in the overall market size. So the growth levels are very impressive that we're attaining, and we'll continue on the same trajectory.
So you said the EBITDA margins in the edible oils business will be between 2 and 4%. That's what you had guided for earlier as well. On the top line in the edible oil space, you said that FY24 revenues would be flat. That was your statement earlier. You continue to hold on to that. And what about in FY25? Any kind of growth that you're expecting to see?
So what happens, Sonia, is that the edible oils are quite volatile. So we've kept the price, pretty much stable where it is. Our volumes, as I mentioned, have grown 35%. Our expectation is that we should grow at more than 10% this year in the business, and longer term it will stabilize at about 6% growth rate compared to between 3 and 5% what the market is growing. So we don't look at revenues per se because the price points can be different, but of the margin as a percentage of revenue will remain between 2 and 4%. So I'm expecting pretty much that this year, if we see some spike in prices, because prices have tended to take off compared to last year, we should see our revenue expansion as well.
Mr. Asthana, hi, good morning. Sorry, please finish. Sorry.
No, I said it's less relevant for the business in terms of what overall revenue are likely to be. I think the two matrices we look at is the volumes as we're growing, which means we're gaining the market share overall. And second is in terms of the EBITDA margins that we tend to make in the business.
Okay, got it. Now, Mr. Asthana, let's get from edible oil, let's get to the foods business. Could you talk to us, give us a similar kind of indication on volume growth, market share and margins from the food segment? We have, some outlook that you provided earlier, so just an update would help there.
So foods has been, FMCG overall business has continued to grow quite substantially. We did about 361 crores in this quarter, 18.5%. Margins across categories have continued to grow. And right from, and this is a good spread that we have. So from nearly 19% margin on the food business to about 10.1% that we have on the biscuits. The expectation is that on an overall FMCG as a category, we will maintain our direction that we've given, about 18% plus margin is what we expect. And longer term, I expect that they should improve only because of two reasons. That one is the premiumization drive that the company has taken. We have made a series of launches in nutraceuticals, in biscuits, as well as the dry fruits. And in the months ahead, you will see a slew of launches that we're planning. So overall, we are expecting that this pace of growth of both the revenues as well as the margin construct should continue apace on that.
All right. Hi, Mr. Asthana. Good morning. Reports suggest that Adani is looking to sell stake from Wilmar. Would you be interested in buying?
We don't need to buy Adani's stake. Yes, we also keep hearing the reports. But we are pretty sort of self-sufficient. Our growth rates are good, and we feel pretty confident that we'll be able to grow the company substantially.
Okay, all right. So we got that. Also, your palm oil business, you're expanding there through plantation. Could you tell us what's the timeline and target? I think earlier you were indicating, close to under 1,100 crores odd, margins of mid-teens approximately. And we're talking about improving profitability big time as well. Tell us more.
So we, oil palm business has been sort of declared the intent, and there's a lot of good work which is happening on that front. We were recently in Assam as well for the mega oil palm plantation drive. We've signed multiple MOUs with government of Telangana, with Assam. So we nearly have about 634,000 hectares of land which has been allocated to the company. We've set up 11 nurseries, 4 more are getting set up in the next 2 quarters. Our oil palm sort of mill is coming up in Arunachal Pradesh. We have taken land in Assam for oil palm mill. So there's a lot of flurry of activity which is going on there across, in the southern India, in Telangana, Andhra and Karnataka, and in the northeastern states. So we are very bullish, both in terms of, how business will integrate itself in a much more significant way. Currently, we get about 10% of our palm oil requirement from oil palm plantation. We're expecting this in fullness of time, which is all more than 6 to 7 years' time. This is going to be nearly 70%. And this will bring in synergies between the two quite substantially. And we believe that on the overall palm oil as a segment, we should have an uptick of more than 200 basis points once the full synergies come in. And the volumes also grow to close to 1 million tons of our oil palm plantation business.
Okay, just one final question. You were talking about the food business and the growth that you're seeing there. You spoke about an 18% EBITDA margin in the food business. But within these categories, whether it's biscuits, Nutrella, dry fruits, nutraceuticals as well, or rather just in the food business particularly, can you tell us which are the segments which are doing very well, where there is a substantial amount of growth? And do you hold on to all of these targets? Biscuits, breakfast cereals, you were expecting about 1,400 crores. Nutrella, your revenue target was 5,000 crores in FY24. Any more updates on that?
So we are holding on to both the targets that we have set. As I mentioned, that the expectation is that the EBITDA margin should be 18% plus. Our guidance earlier was between 16 and 18%. We are getting reasonably confident with the growth in the first quarter that we should do about 18% plus for the year. Our revenue growth momentum will continue. Biscuits are growing nearly at, they grew 35%, but it will taper off closer to 20% year on year. Our nutraceutical business is growing well, foods is growing well, and as well as soya protein business. So we're pretty much, on course to achieve the revenue growth that we have for the year of close to 7,000 crores in the FMCG businesses combined.
Mr. Asthana, we'll wish you all the luck. Thank you very much for joining us and running us through all of that detail here on CNBC-TV18. Thanks indeed. That's Patanjali Foods. Now, on to, Suzlon. That's the company on our radar. Now, the company has successfully completed the QIP issuance. It's raised 2,000 crore rupees via a QIP offering. To discuss this and more on the fundraise, we have Himanshu Mody, CFO at the company, joining in. Mr. Mody, good to have you with us here. Good morning. I remember we spoke last on the 31st of May this year, 2 months back. Suzlon stock was just over 10 rupees. 20 rupees plus now. So it's basically double from the last time that we spoke. And now you have done this QIP offering. Could you talk to us a little bit about the usage of what the funds will be for? We understand a portion will be used to retire debt. What is the current debt? What is the extent of reduction, repayment that you will do? And just some guidance as well. What will be the rate at which, the annual reduction in interest costs?
So, firstly, thank you for having me again. As you rightly said, we've completed the QIP of 2,000 crores. We launched the issue with a 1,500 plus 500 upsize option. Looking at the encouraging investor interest and the kind of names that we got, we decided to go for the entire 2,000 crores. Now, of the 2,000 crores, about 1,500 crores would go towards debt repayment, and the balance would be for working capital and capex purposes. This would mean that the Suzlon balance sheet would be completely debt-free, in fact, net debt-free, and after a sort of hiatus of 15 years. So we would, in fact, be cash surplus without any debt on the balance sheet.
Oh, that's great to hear. So 1,500 crores will be used for debt repayment, and then the company will be net debt-free, having a cash surplus. So that's on the balance sheet. Wanted to understand a little bit about the order pipeline as well. What's the latest there? There was a large potential 10 gigawatt order from the wind energy segment that was expected in FY24. What can you realistically achieve in this year itself, and what could the growth look like over the next couple of years?
So, our confirmed order currently is about 1.6 gigawatts, which we have under our kitty. The 10 gigawatt that you, of course, saying, from a regulatory perspective, there's a bidding calendar that's been issued by the authorities, which aims at doing about 50 gigawatts of renewable energy through the year, of which 10 gigawatts in a year is dedicated wind, plus the other 40 gigawatts would be solar and a portion of wind as well. Now, as per the bidding calendar, the first 2.5 gigawatts of bids or RFPs have been issued, and I think the bids will be underway soon. So as and when the regulatory regime, conducts the bidding cycle, of course, as OEMs, one of the leading OEMs, would be talking to the prospective utility companies that secure those bids.
All right. Hi, Mr. Modi. Good morning. So good to hear that you're going to be debt-free. And obviously, the total addressable market for you as well is fairly large. We'll talk about that a little bit more detail in a while. But for this year, what kind of a revenue number you're looking at and what kind of margins? And I ask you this because your enterprise value now, your market cap is 25,000 crores odd. So the EBITDA number will be in focus to get a rough multiple on EV upon EBITDA. What kind of revenue growth in comparison to last year? What is the margin band we're looking at?
So I don't want to be giving any forecasts on this platform. Of course, last year we did about 840 crores of consolidated EBITDA in FY23. And, Q1 results have also been on track. So we will be on track for, performance towards delivering the 1.6 gigawatts order book, as I said, which we have under our belt. A part of that is for FY24, and also some part of that is for FY25 already, which we've secured. So I don't want to give any P&L guidance on this, but we are on track towards delivering on our business plan.
But there will be a revenue growth for this year. First quarter has been flattish. There will be a revenue growth. And since some input costs have cooled off as well from these mid-teens, that's 15% odd, can the margin band move a little bit higher?
So, again, that will be our endeavor. But, again, I don't want to give guidance on increasing the margin band, by improving working capital efficiency at the company, which is one of our key targets. Certainly as a byproduct, we would be looking at how we can optimize margins. And typically if you see H1 of the financial year is, about 30 to 40% of the overall financial year because of the seasonality. So the businesses are more skewed towards H2 in terms of revenue recognition and deliveries of the machines.
Mr. Modi, not to tie you down to any particular number, but last time, when last we spoke, you said, you could, FY24 revenues could be about 8,000 crores.
Well, that was, if I remember, there was a conjecture that you guys led me to. So, I think we would be on track, as I said, to deliver our order book, which is available with us. And last year, I think consolidated revenue, we did close to about 6,000 crores.
Yes.
And we did 664 megawatts in deliveries in FY23. Now, depending on how much of the 1.6 gigawatt we're able to deliver in FY24 would determine how much over the 6,000 crores in revenue we're able to do.
Just to sort of got that, you said you're debt-free after a long time, right? I mean, Suzlon of yesteryears, we remember that. But then at that point, there was also the problem of debt. Now you're debt-free after a long time. What kind of, and you said there's a calendar which has been issued, 10 gigawatt of wind power auction every year, right? So the market is there, opportunity is there. Does the company have the capability, or are you building capability, or it's all there to kind of, optimally use it to build out things in a very sustainable kind of way over the next 4-5 years, if you can give us some sense?
No, so sure. From a company perspective, the capability to deliver a substantial market share of whatever India does in terms of wind additions has always been there. I'd sort of like to pick up an example of 2017, which was the last peak that we saw in terms of wind implementation. Was close to about 5.5 gigawatts is what the country did in 2017 financial year. And in that very year, as a company, we did about 1.8 gigawatts. So it was 1/3 of the market share in 2017, which was 6 years ago. So there is no reason for me to believe that if we could do that 6 years back, why wouldn't we be able to do it today with a much more stronger and leaner balance sheet?
I just have one more question on this O&M AMC, the operation and maintenance vertical, right? So in that segment, what kind of growth are you looking at, and any guidance? I mean, I know you don't want to give us any guidance, but just a trajectory on what this segment could do for you?
So this segment, in fact, the business cycle is that once we deliver the machines, there's a 3-year warranty that we built into the pricing. So in FY24, FY25, there would be inflationary-linked secular growth on the O&M business because the supplies that were done 3 years ago, due to the financial constraints of the company and also COVID, the supplies were limited. So the real uptick in the business for O&M would be visible from FY26 onwards, which would be a discontinued growth. But 24-25 financial year on the O&M side would be more sort of secular inflationary-linked growth.
All right. Himanshu, just coming back to you, we got a new listing right here on the screens. SBFC, which is Small Business Finance, that has made a debut in the marketplace. Is run by very well-regarded promoters. I mean, people who launched the business, and it's not an old business. I mean, just launched, I think, in 2017 or so by veteran HDFC bankers. So, the market has taken a bet on the promoters and, of course, I mean, what they're trying to do out there. So it's a 50% premium to the issue price, basically, right at the word go. The stocks come to the market at about 85, 86. There was some hand-wringing about the fact that even at the issue price, the valuations were a little steep. But, well, things have gotten a little steeper with the listing. So, yeah, I mean, the market pretty receptive of what is perceived to be good quality promoters and good quality businesses.
Absolutely. And, even if you look at their core financials, right, the AUM growth has been really strong. I mean, in the past couple of years, it's a 50% AUM growth that the SBFC Finance has seen. And as you said, the management is not only experienced, but they have a very strong retail lending background as well. So, that, of course, will help at a time like this. So, SBFC Finance having a very strong listing there. But, Himanshu, before we let you go, just one final question from my end. We were talking about how the company is going to be debt-free now with the proceeds of the QIP. But any fresh capex that you'd want to put on board, would you have to tap the market anytime soon for expanding your capacity?
No, so we have, enough capacities installed to be able to deliver the market requirements. And yes, there is certain capex that we need to be incurring in FY24. And part of the QIP proceeds, the balance 500, as I said, would be towards working capital and the capex requirements that we have for this financial year. So we are well geared up from a market opportunity to completely meet the demand and take a fair share of what we deserve.
Okay, Himanshu, thanks so much for stopping by. Well, the big headline, I think, is that you're debt-free, which is good news for your shareholders. I think next time around, we'll try to quiz you a little bit more on the operational guidance for this year, because now, as I said, the market cap is already 25,000 crores odd. All eyes will be on the EBITDA. For the time being, we'll slip into a short break. Mitesh Thakur will join in to give us some technical trades. We'll also focus on the commodity markets when Manisha Gupta joins in.
Okay, welcome back. 65 points lower. We're at about, 19,370. So it's not a bad-looking screen, actually, just 1/3% cut. Mitesh is with us. Mitesh, will we possibly get a repeat of what we saw on Monday, which is that the low was made early on and then a bulk of the day was spent in repair, higher?
Morning, Prashant. I wish I knew that. I think, but the idea is that the decline should be limited. I think, another 100 points lower and you would look at taking some, more bias towards the long side positions. So I don't expect 19,200 to be taken out. So we maintain that view that buy closer to 19,250, 270 zones and then take a stop below 19,200. And I think on the upside, the levels to watch will be 19,500 and then 19,650. So if it goes like Monday, I'll not be surprised, but it's difficult to say on a day-by-day basis whether it will be an up day or a down day because afternoon, once the Europe opens, you'll see some kind of volatility coming to the markets again. So we'll hold our horses and try to buy it near to the range, the lower end of the range. And on the stock side, I have one buy and one sell. RBL Bank is on the negative side. That's, again, the financial sector still looks slightly on the weaker side too. So keep a stop at about 223. Look for targets of around 206. And on the buying side is Oracle Finance or OFS's software. Recommend buying here with the stop just below days low of 39.83. So 39.80 is what I recommend. And a target of around 41.20 can be.
Okay, Oracle Finance. On the long side, look at Garden Reach. 10%, actually 14% on Monday. We had the management with us on Monday morning. Another 10% this morning. It's very smooth sailing. Cochin Shipyard is up 6%, and Mazgaon I can't spot, at least not on my list. But any thoughts on these names? Any trades here, Mitesh?
Yeah. So disclaimer here, Prashant, Mazgaon is part of my portfolio. I think the stock had a very good rally from 750 to about 1950, 2000 levels, and then has gone into consolidation. Yesterday, while it bounced back, I think it's just still a range movement. Broadly, 1950, 2000 on the upside to about now 1720 on the downside. I think that's the range the stock will consolidate. Eventually, I expect it to move higher once it breaks the range. Look at targets in excess of 2,500 over here. And on Cochin Shipyard, the move has again started over here. Some expansion being shown with the movement on Monday and today. I would still be a buyer here with a stop below 700, and the next target should be in the range of about 820 plus.
Okay, a couple of more stocks I just want to mention. PVR Inox, by the way, is at a fresh high, 1,700 now on PVR Inox. And that's been a huge gain, almost 10% this month already. And something like an APL Apollo Tubes, which is up 50% this year, is at a fresh 52-week high as well, 3.5% high over there. And then in this whole home improvement space, something like a Kajaria Ceramics is sitting at a fresh high. It's been a darling of the market in the last couple of years, and once again fresh highs over there on Kajaria Ceramics. But let's do one thing. Let's thank Mitesh and let's move on to the commodity markets now. Manisha is with us. Manisha, what's the one commodity that you're tracking today?
Well, I'm looking at the metal sector, Sonia, and this definitely is not the darling right now because we have seen extended declines come in for this one. Almost every metal is trading in the negative in the Shanghai markets there. You have to look at the weak Chinese trade data and then the retail sales, industrial manufacturing, fixed asset investment, everything has been on the weaker side. Add to that the kind of imports that we saw and the China bank loans which have slid to a 14-month lows. If you look at the housing numbers, those are weak. Exports are the weakest since Feb 2020. So every number that has come in from China for the month of July has been on the weaker side. Also, when you look at the property sector, and this is an area that China has been waiting for some time now to sense some improvement there. But here as well, there have been missed bond payments now, this time around from a real estate giant Country Garden, and we are looking at pressure coming in because of that as well. Is the reason you have seen the prices continue to decline. So aluminum is trading at a 5-week lows. You also are looking at the China production continue to increase, up by 2% for the month of July and 2.7% higher in 2023 so far. So there is higher production and not so much demand coming in. Iron ore prices are trading at a 2-month lows as well. Here also we are looking at higher port inventories and weak demand also coming in from the steel sector. Steel prices also are trading at near 2-month lows. We have seen prices continue to decline on a week and a monthly basis as well. The China rebar inventories have gained up by 35% year-on-year basis, and that tells you that as the production and inventory increases and the demand not catching up, there is pressure continuing there. Other metals also are facing the same fate. You have nickel prices, which are very close to their one-year lower levels now. There are higher supplies from China and Indonesia. The other metals like copper is trading at a 2-month low. Zinc is trading at a 3-week lows. So there's nothing really in metal which is trading in the positive on a week-on-week or a monthly basis. This is what we've done in the last 1 week. So 1.5 to 3% of a decline coming in for everything across copper, steel, iron ore, zinc and nickel. And the markets are not even looking at buy calls at these levels too.
Okay, thanks a lot, Manisha, for that. Let's slip into a quick break. On the other side, our special segment is The Economy. Lata will connect with Neelkanth Mishra, Chief Economist at Axis Bank and Head of Global Research at Axis Capital, to discuss the July inflation shocker and the services export scenario in India.